Who's the man with the master plan? Better get yourself some writers. I can't even do
Hey, it's Delay in this episode for 48 of the Orange Pill Investor. And I got a couple of messages about earnings. And what's up, Howard? Yeah, a little early for me today. I didn't get to the gym yet. And we might go like fruit picking or something. So I might be hitting the gym late. But yeah, I got a couple of messages about, hey, are you gonna like YOLO some long calls for earnings, stuff like that? And the TLDR answer is no. I generally don't do that, and usually it's because of IV crush. But implied vol is so low for strategy, I don't even know if it could be crushed, and the chart isn't really showing an implied vol pump that could be crushed by earnings anyway. Like, we're well below the mean here. So in that sense, maybe if there are any types of earnings calls that would be worth degen, YOLO overnight long call play, this might be it. But I generally don't do those things just because I try not to predict in the short term what the stock price is going to do. So, these things can hit, and I know we're all expecting a face melting rally or whatever, and long calls should print money and we'll all just ride off into the sunset overnight. But the market is so irrational that even if, we know we're going to blow the EPS estimates out of the water, but even if that happens, like, there's, it could just be like a sell the news event, and maybe this pump to 400 is priced in, and you just never know. So for me personally, I'm not going to do that, but I can definitely see the allure of something like that. But normally what happens for earnings and why these don't work out is because, like, let's say for Tesla, implied vol was pumped up to 78 and maybe the baseline is like 50. You're like, okay, you can buy long calls at the money, but because they're going to be a little bit overpriced, even if that stock gaps up 5-10% and you're like, okay, cool, let me go cash out on this option bet that I just won, but implied vol crushes, then it's like, oh, well, there went all my profits. So you can actually win the direction overnight on earnings, but if implied vol collapses, those option prices could end up actually losing you money. So as a rule, I don't go long for the next earnings, expiration date for that very reason. But with strategy looking like this, maybe there's less risk. Now, the market can do whatever the hell it wants. So there could be a gap down here, right? Even though we have like 365-day low implied vol, it doesn't mean that we can't gap down lower after earnings. So you're facing two headwinds when you buy calls going into earnings. You're facing IV crush and a coin flip on whether the price goes up or not. I asked Grok why the consensus EPS is, like 10 cents a share, or, just very close to the break even, might even be slightly negative. I can't remember. And when the real EPS is going to be like massively positive. And Grok seemed to think that it wasn't that they're not aware. They just choose to consistently report their earnings, their EPS predictions based on the profits, nothing to do with the balance sheet. And so just because they're not putting that number in their EPS prediction doesn't mean that they don't know what's coming. And if you remember what happened at the end of Q1, we had a massive earnings miss. The EPS, consensus EPS was the same shit it's been just every quarter after quarter after quarter. It was like a negative 10 cents per share or something. And because Bitcoin was down in Q1, we had a huge miss, and Strategy's price didn't do anything. It just was like, okay, whatever. We missed earnings and we don't care because everybody knows how much Bitcoin Strategy owns. They know what the price of Bitcoin is. They know how many shares of Strategy are out there. And it's pretty easy to do the math and know what the NAV is and what the multiple of net asset value is. And so I'm not as optimistic as I was 6 months ago that we'll get some kind of smash. Now, I hope I'm reverse jinxing it and we do get a face melting rally. Of course, I want that to happen. But I'm not going to be making any YOLO degen bets, like predicting that is going to happen. I forget which famous trader said something like, he basically sits on the sidelines until the trade is so obvious that he has no choice but to just go and take the money. And since I would just be, flipping a coin, right? If I was going to, pretend that this was Thursday and, okay, I'm going to buy some slightly out of the money, assuming we gap up to 430 or 450 or a bajillion, whatever. This is basically a coin flip. So 36 delta, 2 out of 3 chance that this doesn't hit. So at the money is basically a coin flip. So yeah, I generally don't like these, and it could be my bias as an option seller. So anything under 45 days, my instinct is I want to be on the sell side, because this is when theta is rapidly increasing. Now, if you're going to hold this overnight from Thursday to Friday, theta is kind of meaningless, except that that if you're going to hold this for one day, like theta is theta is almost at like 100%. All of the extrinsic value has to drain out of this from Thursday to Friday. So you're not really betting, oh, okay, I'm going to capture some extrinsic value. No, you're making a directional bet that you think the price is going to go from A to B. And I generally just don't do that. It's not in my skill set. So if somebody out there is a good momentum trader, or maybe you got some insider information and you know exactly where the stock's going to go, you could make those kind of plays. But for the most part, I have a ton of long positions, but they don't expire this Friday, right? I got Decembers. I got more Decembers. I've got Januaries. These are the types of things that I don't mind holding over earnings because they're not really affected by earnings crush. My Decembers don't really give a shit about Q2 earnings because there's Q3 earnings and well, we won't have Q4 earnings by then, but the expiration date is too far away from Q2 earnings to be really affected by them. So I don't mind holding these over earnings, but me personally, I'm not going to be placing any overnight long call lottery tickets. But, of course, it's not financial advice, so I don't want to discourage anyone from doing something like that, especially if it's a very modest piece of your portfolio, right? If it would be no different than the money you might take with you to a casino trip that you're going to lose over the weekend, like I think that kind of makes sense. But if I was going to do something like this, I definitely wouldn't make it like a meaningful part of my portfolio. If somebody else has some kind of information that they can trade on, sure, do your thing. But I thought it would be good to talk about it because I have been getting some messages about whether I'm going to do something like that. And so my plan has been, and I've been talking about it, is just in case that does happen. So I'm not going to be leveraging up, but just in case it does happen, I'm going to try to take off as many of these covered calls as I can afford, because I don't want to be limiting my upside if we do get the rally, but I'm not going to put additional money on the table assuming that it does. And I'm not going to choose an expiration date that's so close that it has to hit by then. However, I am flying out to Portland for the Bitcoin is for Everyone conference on the 1st. And there's a little like pre-party on Thursday. So I'm trying to get there early enough to attend that. And so that's actually going to put me on a plane. Usually I would take these off maybe in the afternoon on Thursday before earnings, before the close. And I'm already going to be on the plane. So I'm going to have to do this either Wednesday or like super early on Thursday morning. So I might be up early again Thursday, Howard. And I might have to take these covered calls off like as soon as the market opens Thursday morning. Otherwise, I'll be doing it in the airport at my terminal at the gate waiting for my flight. I always get to the airport 2 hours early because I guess I'm still a little bit I'm still like a well-trained dog in the sense that I try not to miss movement. So we show up to flights at the airport like 2 hours before boarding, not even 2 hours before departure. So we go straight to the gate, find out that the gate still exists. It's a real thing. And then we go walk around and find something to eat, I guess. So that's my plan. I'll be taking a bunch of these off on Thursday, maybe all of them. Sometimes I'll leave my poor man's covered call on because if this gets wrecked to the upside, I've got the long call covering it, and I can just use that as an excuse to take some leverage off. I've been kind of levering up and just kind of waiting for that next move up, right? We need strategy to double up, and then I'm like, okay, I'll feel good about taking off this leverage. So hopefully the damn Decembers will hit, and I won't have a repeat of the July 1080 debacle. So probably won't do much today. I might have had something get exercised in the 5K account, so that might be the only thing that I actually change today. What's up, Kakapo Coder? Yeah, that one was actually, so I was actually thinking about the Dr. Dre song that sampled that one. So when I went searching for Who's the Man with the Master Plan, I actually ended up landing on the original that it was sampled from, and I was like, this is actually better. And no explicit lyrics even. So, and it was pretty funky, so it was pretty good. Thanks for confirming. I've been so paranoid. I did a test recording before I went live, but you never know. I can't imagine. So the last time it happened to me, I didn't do a test recording, but I had like 5 or 10 episodes in a row with no issues. So I'm like, oh, okay, maybe this doesn't happen anymore. What's up, Kanal? What's up, Richard? Could be misconstrued in media. It's just fake earnings. Yeah. Yeah, they may be discounting it completely because, I mean, they're all still reporting fiat finance media style. Let's see. This is exactly what I expect to happen. Unrealized BTC gains via FASB accounting won't amount to much if the very next quarter they could post similarly sized losses. Yeah, and that's going to be an interesting one too, because I mean, we're so excited about strategy posting, historic EPS. They're going to finally qualify for the S&P 500. But like that's quite the anti-catalyst if Bitcoin goes into a bear market and we drop from 444 back down to 84 and we have to report a I don't know, a freaking $20 billion loss in one quarter. That would be quite the news story. But yeah, maybe the market just doesn't care about the balance sheet. It still will be nice to get into the S&P 500, and I think I'll mention it again because I've been complaining even a little bit on the True North calls that, hey, we need to pump up the implied vol, right? It's, if volatility is vitality, and like, where's the vitality in strategy right now? And I still don't hate the common ATM like some people do. It's accretive. It's just not as accretive as the maybe is not as accretive as the convertible bonds, adding leverage, and it's not as accretive as the preferred offerings. But selling at above 1x MNAV common shares is still accretive. I mean, it always was and should always will be, as long as the MNAV is high enough to justify it. But the common ATM is keeping that leverage ratio down. So every time Jeff shows his spreadsheet and talks about the leverage ratios and how under-levered they are, and how that increases the credit worthiness of the preferreds, and how, basically well positioned the company is. But that's kind of like, in my opinion, kind of holding back the volatility a bit, because if you're going to call strategy a leveraged Bitcoin play, but they're not very leveraged, then what really is there to justify a larger MNAV? So the ATM, I don't think, has that direct suppression in price. Like, some people are like, oh, strategy's down 10% today. Thanks, Sailor, you're hitting the ATM. I don't think it's directly correlated in that way. I think it's more so the ATM kind of reverses the levering up that the preferreds are doing, which is probably to be expected at this stage. The preferreds are still kind of like in their infancy. And once they get rolled out, where they'll be able to ratchet up a lot more leverage, they'll be able to really lever up like we used to see with the convertible bond offerings, right? A couple billion here at a time, just slamming into leverage. So eventually they'll be able to do that with the preferreds. But for now, it's kind of like 2 steps forward, 1 step back, because they're going to be levering up with the preferreds, but delevering with the common ATM. So I think it's going to be kind of like grinding our way up to higher leverage, and the volatility is just going to lag. And so that was frustrating for me, and I've been complaining about it, not loudly necessarily, but I think that I may have overlooked the benefit to low vol right now, because the S&P 500 committee could use high volatility as an excuse to exclude them from the S&P 500. And you don't want to give them any ammunition, like for no reason, right? So having kind of a low vol probably sets them up to get in easier. And having a nice low leverage ratio. I would like to see a nice juicy 20% or more leverage. However, that might give the S&P 500 committee another bit of ammunition to say, nah, you guys are over levered. We're not going to let you in. So I don't know if strategy is keeping the vol low for that reason and keeping their leverage ratio low for that reason. But it would make sense if they are paying attention and really like planning ahead and trying to take away all of the committee's excuses. The last one that I heard that seems credible was, God, what podcast was I watching where they mentioned it? I usually like to give credit when I hear these things, but I can't remember. I mean, I listen to so many freaking podcasts a day. It's kind of hard to keep track. But someone was mentioning that Saylor having so much voting power, the S&P 500 could use that as an excuse, but they claimed that the committee could actually approach strategy and say, hey, we're not going to let you in unless you change your, I think Saylor's got some voting shares that gives them 10-1 or something. They're like, I could be talking about out my ass, but anyway, long story short, Saylor has a lot of voting power, put it that way. And the committee could say, hey, if you're willing to reduce your voting power and make it not seem like one person has so much influence over the company, fix that up and then we'll let you in. So there could be some like behind closed doors conversations like that happening. So it's not necessarily that him having so much voting power automatically precludes them and it'll be a shock. Like they might be making these kind of like behind the scenes conversations. And that's another benefit that the common ATM has, is every time that they dilute, it's diluting Saylor's percent that he can kind of influence over the company. And early on, I even thought that maybe he's trying to recreate the Immaculate Conception of Bitcoin, where, Satoshi just kind of disappeared and donated Bitcoin to humanity. And as the common ATM continues to dilute his key man risk, he kind of would be like diluting himself into obscurity. And at some point, his share percentage would be so low that he doesn't really even have key man risk anymore. And the company would almost be like a donation, not necessarily to humanity, but to the common stock shareholders that have been kind of here since day one. as the voting power is transferred from the concentrated, centralized people like himself to the common shareholders. So I thought that was kind of cool in 44 double D chess kind of scenario. What's up, Koki? Let's see. When the outcome of a sell the news event happens after the event, would it then be irresponsibly rational to do a degen play? Let's see. When the outcome happens after the event, so if it does rally up, if it does gap up, irresponsibly rational to do a degen play. You mean waiting for it to gap up and then try to jump in on the momentum? Or are you saying if you're expecting that to happen, try to short it? I'm not sure what you mean by the question. S&P 500 inclusion realization will kick off slowly and then suddenly later. Yeah, that wouldn't surprise me too. This could just ratchet up. Like, as soon as you start seeing a pattern and you see how things are going to go, the market loves to just shatter your expectations. So last March, we had like a 4x move, right? We went from 50, and a month or two later, in short order, we're at 200 a share. Same thing happened here. We're at 115. Basically 4x-ish to, I think we ended up over 500 a share here. So this isn't completely accurate. So then, the next thing we're like, okay, if we 4x from the bottom here and get to 1,000 a share, that would be the pattern repeating itself. But maybe this time it's just a slow grind. Maybe, let's see, if we did a slow grind to 1,000 a share for December, that would be like $100 a share per month. August, September, October, November, December would get us there. So maybe these face melting rallies are done are done for this cycle. Who knows? Brandon says hello from Bangkok. Well, hello Bangkok. So that's got to be, is it like in the middle of the night over there? Thanks for tuning in at 2 a.m. or whatever the hell it is in Bangkok. Let's see. The only thing I can momentum trade is big convertible bonds. Okay. Yeah, I've tried to do it every once in a while. Like back in the day when we had, so this was after COVID. What was that COVID stock? Geez. Anyway, when it was kind of obvious that those were just getting pumped to the moon, every time that they would hit like 52-week highs, there was an opportunity kind of like to jump on that momentum for the day. And I mean, I might have made a couple of bucks here and there, but I can't even say that I made more money than I lost, honestly. So it wasn't a skill that I was able to develop, but it is kind of on my bucket list. I want to put that in my toolbox. Most of my bulk calls are for January, not trying to do anything short term. Looks like we're in the same boat there, Anger Buddha. You are so sensible, except for the 1080s. Yeah, I must have a weakness for them, or maybe I just don't like to admit that I'm wrong, right? If I keep betting on the 1080s, they got to be right eventually, right? Does the plane have Starlink? I don't have the slightest idea, but I generally don't. I don't even spring for the Wi-Fi. See, January, March 2026 are where I have my expirations as well. Too much short-term unpredictability. I think IBIT calls are better for short-term plays. So what's IBIT's? IBIT's implied vol can't be very high either, right? Yeah. So IBIT. I just want to see what. Let's just go to January. So at the money IBIT and at the money January. All right, saying 60 delta on the 405s. Basically the same, 59 delta. I guess I'd have to go to options profit calculator to really get a better sense of this. But let's just say, let's see, 10% of the share price would be 670. So that's about what? 15% of the share price. $9.55. Yeah, 14% of the share price. And 68, 43 divided by 407.99. So yeah, so the strategy calls are only slightly more expensive than IBIT. I think at this point I would be leaning towards strategy. If I only have to pay 2% more for an at the money long call and I can get strategy instead of IBIT, I think I'm leaning towards strategy. Now let's see how far out of the money I can go. So this is the 6 deltas or the 1080s. And I don't know what we can get at the top of the IBIT chain. Probably not 0.6. Oh, actually 0.06. That's pretty cool. So let's see if this matches up. So 68 divided by 67. Okay, so that's about 1%. And 530 divided by... Wait, I should be dividing by the... should I be divided by the current price or the... share price? What did I say? 68 divided by... Yeah, 6,700. Very similar prices. I would kind of expect IBIT to be much cheaper. So I think the tie still goes to strategy for me. The only thing that I found for IBIT that I kind of liked was like a poor man's covered call. So spending that's a little bit too ambitious. This is a little safer. So like spending $1,600 on a long call and then going out 65 plus 16 gets us to about 71. So maybe selling something like this. selling the 70 for $2, spending 13, collecting 250. Divide this by 4, that would approximate a goal for the weekly returns. So that would be like maybe $60 a week on a $1,600 investment. So what is that about? That's almost like 4% a week. As long as IBIT's price holds steady. But yeah, that was the only thing that really looked kind of interesting to me. And something like this would fit into a smaller portfolio as well, right? If you're not throwing around hundreds and thousands of shares of strategy, right? And so actually, maybe this is something that I should do on my 5K account. We'll see if I can make that happen. I think that's actually a good idea. Thanks for that, Kanal. Let's see, Buffalo Dill. Let's see, I think Zuck had even more voting rights with Meta than Saylor. Yeah, but it's all about finding justifications for doing what they already want to do, right? If they want to let strategy in, then they can completely ignore that. If they don't want to, then anything that you give them, any kind of rope that you give them, they can just go out and find justification to make the decision that they already wanted to make. But if you take all of those things away, then it kind of like forces their hand a little bit. But point well taken. What's up, Dude Face? Just sticking with writing covered calls on 2/3 of my shares. Are you holding those over earnings, or are you going to take those off on Thursday and put them back on Friday? Let's see. I meant that when earnings call is a sell the news event, we could possibly see a reversal to the upside the day after. A reversal to the upside. Okay. So we get a sell the news, but then we bottom out and then have a rally. If we do get a dip, I mean, I'll be buying it. That's for sure. See, if earnings is a lift off, I will roll. If it's a sell off, I do nothing. If we do nothing, I do nothing. Makes sense. What's up, Yasir? Thanks for a lot of the insight, mate. Hello from Iraq. Hello right back. That's pretty cool. I need to keep a spreadsheet and almost kind of like some people like to visit, one of their like bucket lists is to visit every state in the United States, or let me visit every country in Europe or every country and blah blah blah. Maybe I should just put a spreadsheet together and see how many followers I can get from every country in the world. That would be pretty cool. So thanks for tuning in, Yasir. Let's see, I'll give you a message the day before. I read that almost as a massage. I'm like, you're gonna give me a massage? I appreciate that. The day before I do a convertible bond play with full details. You can moonlight me if it works or laugh otherwise. Interesting. Convertible bond play. So is that when you know that there's a convertible bond about to happen and you're anticipating them shorting it and arbing, and you kind of I don't know, do you short ahead of their short and then buy the dip and then it comes back and you just, I don't know if that's called would be considered a scalp. COVID stocks, Netflix, Zoom, and Peloton. Yeah, I was thinking one of the big 3 companies that came out with their little vaccine. God, I think it began with an M. You made 1080s a meme, helping to perpetuate the bewilderment there. Yeah. If I had taken profits in January, I could have probably gotten legendary status with Josh Mandel, but I missed out. What's up, Dan? See, don't understand everyone getting bearish right before earnings. Just sell more IV and strategy if you're bearish, and you can stay long if you sell short dates. Hey, but I'm just a guy. Yeah. Yeah, we're international up in here. Just tuning in, we're talking about earnings plays. Yeah, I'm basically talking about the earnings plays I'm not going to do. So I'm not YOLOing. I'm not YOLOing into anything that expires, like this Friday or anything. I'm not trying to discourage anyone from doing it, but for me personally, I try not to take short-term directional bets. Like, I feel like I know where the stock is going by December, by January, but I don't have the slightest idea what's going to happen. Like, I have no idea what the market's going to react to based on earnings. Was it Q3 or Q4 they had last year that was just amazing? I think it was right before. Yeah, I think it was right before that November run up, because they announced their plan, and everybody was like freaking out, and they're like, "Holy shit, they're gonna buy so much Bitcoin," and the stock pumped to bejesus, and like that earnings call was just one for the ages. So if they have something like that, maybe there's something that just lights a fire under the market, something cool could happen. Or if people tune in and they're just like, oh, well, okay, pretty much just a regular earnings call. No, nothing really moves the market. It could just trend sideways, or even kind of like as bullish as and zealots as we are in strategy. The rest of the market can just be unimpressed and and send the price wherever it wants to go. So I got my fingers crossed. I'm hoping we get the rocket ship. So yeah, for earnings, for me personally, I'm just going to be taking off as many of my covered calls as I can afford. So we'll see how much it costs me to close all my 430s on Thursday. I'm breaking my arm patting myself on the back that I didn't panic and pay $3,900 per contract to close them a week and a half ago, because that would have been quite disastrous. I really wouldn't have minded if we were still at 455 and I had to pay that this Thursday, to pay for it. I probably would have just closed some of my leverage positions. That would have been fine. But yeah, in general, I try not to panic roll, right? A lot of people lose money because they buy a stock and then it dips and then they panic sell. As an option seller, you sell a covered call, and then when the price runs up, a lot of people lose money because they panic roll, or they panic close that covered call, and then a week or two later the price comes back down and they're like beating themselves up because they would have been better off just doing nothing. Yasir, let's see, that would be amazing having you in Mesopotamia. We'll have an amazing time. Yeah, I'm gonna have to find some time to travel to some cool places. I wonder I'm hoping, I think most of us are Bitcoiners here. So, I'm hoping Bitcoin fixes everything. Checking off visiting Iraq off my bucket list would be pretty cool. Let's see. Convertible bond play. Join the arbors and short the equity on pricing day. Yep. I think that's what I was trying to describe, if I did a poor job of it. Moderna. Thanks, Koki. It was Moderna. mRNA. So I was in a trading club on Clubhouse called 13th House, and this was like their bread and butter. So they made so much money on this momentum right here. So like, 66 a share, August 2020. Just every time they were setting all-time highs, they would just get these pumps and these pumps and these pumps. And it was like, they weren't even holding, some of them times they weren't even holding these like overnight. A lot of this was just day trading and momentum. Now, I had a real job, so I wasn't able to get in on some of those calls while the market was open. So that's why I ended up going to YouTube University and learning how to sell options. So I kind of missed out on all of this momentum trading boot camp stuff. And, option selling was kind of easy mode. Whereas this momentum stuff is like you're printing 2x, 5x, 10x until you get to here. And if you are still long when this happens, you give it all back to the casino. So it's great when you're like, holy shit, I'm going to be the richest person in the world. But if you don't figure out that this is the top and you're still trying to trade long, you get absolutely destroyed. So this is where you kind of have to have, I don't know, I guess you kind of have to understand what's happening with the market and where these things are going. And since that's not a skill that I developed, I think settling into the to selling volatility makes it a lot easier to trade and be successful, right? I didn't do 10x's, like people who were long mRNA did here, but my small profits, weekly, monthly, aggregated over time, they were good enough for me. Let's see. I recall that the last strategy convert, Ben and Jeff were both selling at the money calls to take a nice scalp. Interesting. There's so much content. Like I didn't even know they were doing that. You would think, right? People probably think that we just huddle our heads together and we all just make the same trades or discuss every little thing that we're doing, but I had no idea that they were doing that. Your earliest expirations are December. Okay, we're in the same boat there. Thinking about starting to roll them out further because I still enjoy strategy leverage. Yeah, my standard is I roll them out before they get below 90 days to expiration. That's kind of like theta really starts to kind of creep up at 90, even more at 60, even more at 45. So as long as I roll out of those by 90 days, I'm usually pretty happy with it. Dude Face, I've got a few month out spreads, 530, 570s, just in case we moon. These are cheap, out a month right now. That's a very good call out because instead of or even for this Friday. So instead of spending $750, converting this into a spread, you'd only pay half of that, but you could still double your money. If we go above 425, you could more than double it, actually. You could probably, yeah, you could double up. Or is that a triple? Total cost 300, and you'd get paid out 1,000 minus your 300. Yeah, basically a double. So something like this you could get for half the price of paying 750 and cap your upside. But you're going out a month, which I think is fair as well. The 530s are much farther out of the money. Probably a lot cheaper too. Dan, I think the noise to attention ratio is absolutely off the charts. Strategy will find it difficult to cut through the noise, except for events like this Thursday. Even then, though, this week has so much going on that it'll be difficult to cut through all the quarterly earnings happening this week. Yeah, when Mason started the irresponsibly long MSTR group, and we had like less than half of the people in that group than we do now, I said that was like the best the group was ever going to be, right? There was a lot of signal, there was a lot of alpha. And as this just gets hyped and hyped and hyped and hyped, the community is going to get so big and the noise is going to be absolutely deafening. So congratulate yourself that you got in on the ground floor and probably got the most signal to noise ratio exposure. The space is never going to be as good as it is now. However, at the same time, I still think that it will cut through the noise on Thursday and Friday. Crash course. Cheers, frogs. Is that a Pepe reference? Did Strategy not make any purchases last week? Not seeing anything on their sailors page. Yeah, there was a dot day. I think Adrian posted. But they did make a purchase, but none of that purchase was with their STRC money because that money hasn't settled yet. So they should get another 2+ billion to spend this week. That wasn't included in whatever they bought last week. But somebody posted an update on it. What's up, Ben? How dare people out my trades like that? Yeah, man, everybody's paying attention or your phone is bugged. One of the two. Let's see. For spreads, consider waiting for until earnings day and buy 1 DTA for directional. For spreads, consider waiting for until earnings day. So you're talking about getting them on Thursday? Buy a spread on Thursday for Friday. That's probably the cheapest way to do a lottery ticket. For a quick double up if you hit on it. The announcement for today didn't happen for strategy yet. Maybe Wednesday with STRC proceeds. I swear I had X notifications for dot day. Orange dot day. But I could be wrong. All right, so any trades I need to make. These are going to be Thursday, so nothing to do here. And I'm still using a bunch of margin. Well, not a bunch of margin. I think it's a reasonable amount of margin. But it's more than I said I was going to use. Dumped all my MSTY and IMST. And it's funny, I went to my best friend from the Navy's birthday party over the weekend. And one of the guys there, we had a little back and forth. Well, it was a good conversation, but we had a back and forth about MSTY. And it was the same argument and counter argument that I've been trying to fight on X. And his thing that he literally was just like a pit bull with a jaw just locked and just could not let go of it was, yeah, but I'm taking my MSTY dividends and buying Bitcoin, which could be a reasonable thing to do because you're increasing your sovereign wealth, right? Bitcoin is your sovereign money, but it doesn't have this as high of a CAGR as strategy does. And my argument has always been, and I think it was Matthew Crater that said it this way, and I think once you think of it this way, there's no other argument that really needs to be entertained, and that whichever asset has the highest CAGR, if you're trying to have a higher portfolio, that's the one that you have to get. Anytime you sell that asset for something with a lower CAGR, you're going to have less money in the future. Now, you can argue that Bitcoin is better money because it's sovereign, but if we're talking about the stock market, we're already ignoring the sovereign aspect and we're just comparing stock to stock. And, you know, me tracking Misty, even British Hodl trying to prove that Misty's better, he proved the opposite. Hornet Hodl is the guy that has the Bitcoin retirement calculator. He did a very detailed comparison of, which does better, Misty doing a drip into more Misty reinvesting the dividends into strategy, holding just strategy, and strategy was the best, period. Not even like trading it, just hodling the damn thing. Interestingly, in his scenario, using your Misty dividends to buy strategy only underperformed strategy itself by 1%, which seemed odd to me at first, but then I was like, oh yeah, when you get paid your Misty dividend, if strategy's down, you're kind of like buying the dip. So you're probably going to end up with a lower cost basis on your strategy overall. So I thought that was kind of cool. But every single credible research that I have seen shows Misty underperforming. So it has a lower CAGR, meaning anytime you replace something with a higher CAGR with something with a lower CAGR, you will have less money in the future. It doesn't matter if your goal is income. It doesn't matter if your goal is growth. It doesn't matter what you plan to do with the money or reinvest the money. Higher CAGRs get you more money. Lower CAGRs get you less money. It's the same thing that Saylor says in every single interview, right? You don't sell the winners to buy losers. The only argument that I haven't done a bit of detailed research would be any tax advantages to Misty, because you're not going to get taxed on your return of capital until your cost basis is reduced to zero, which would be after about a year. But at that point, if you want to sell your Misty and move it over to something else because you're like, oh, okay, well, I got my 100% returns on my dividends over 1 year. Now I'll sell it and move over to something else. Well, now your cost basis is zero and you're going to have to pay the taxes on, if Misty's trading at $20, you're going to pay taxes on $20 a share from $0 to $20. So that tax benefit, as far as I can tell, it's not financial advice and it's not tax advice, but there could be some tax advantages potentially for Misty over selling straight strategy shares for income. But I don't think that those tax advantages extend forever. So there could be an argument made there for some kind of a tax advantage for Misty, depending on everyone's situation, which everyone's is going to be different. So ignoring people's individual tax situations, though, Misty has a lower CAGR, and I think that's the bottom line. Seller didn't post, but someone posted the 8K or whatever with no buys. Okay, interesting. Oh, dot day happened, but no purchase. All right, thanks for confirming. Oh, likely due to earnings. Yeah, so maybe we're in the blackout. Self-imposed blackout period. Yeah. But maybe that means no ATM as well. We'll see. Yeah, because if there's no buy, then they wouldn't have used the ATM. I wonder if the funds from STR settle, though, if they can spend that. Because that wouldn't be... that probably wouldn't be included in the blackout. So maybe there'll be a purchase midweek. I was just listening to Signal. Always listen to the end of the True North streams. That's where Ben and Jeff drop his best stuff. Yeah, if you're trying to leave the stadium early to beat the rush to the parking lot, you miss out on all the good stuff. To give me 2 cents on the MSTY debate, some people just want income because they don't make enough that they could comfortably buy 100 shares of strategy. Yeah. I got a couple of responses to that one. And the point is that YieldMax does not generate enough profits from their covered call selling to compensate for the NAV erosion and the 1% management fee that they're charging people to underperform in the first place. In British Hodl's experiment, he started out with like, I don't know, however many shares, 400 shares or something of strategy. And even every time MSTY got paid a dividend, he sold off however many shares he needed to get an equal income amount. And MSTY had like 30% NAV erosion after a year, and MSTR shares, even though their share count was dwindling, only had like a 25% NAV erosion. So even using straight strategy shares for income without selling covered calls on them still did better. And this was coming from someone trying to prove the opposite. STRC funds clear on the 29th. Okay. So we might get lucky and see a buy. I can't imagine they would just hold on to 2.5 billion for next week. That's got to be burning a hole in their pockets. Return of capital from MSTY beats any dividend stock ETF that I know of. Plus, it's cheap unless we start getting micro calls from the CBOE. I don't really see an alternative for those with less capital. So yeah, and I have to measure my criticisms because I think that MSTY beats every single dividend covered, dividend ETF in YieldMax's history, and probably every single other dividend stock in history. That's not the argument, though. My argument is just because you're beating something else that's like a shitty investment doesn't mean that it's the best investment. And if we're trying to put the absolute best things in our portfolio, if you want to compare MSTY to inferior products, then MSTY wins hands down, right? But if you want to compare MSTY to other elite assets with insane CAGRs like strategy, then they don't perform as well. So yeah, anybody moving over from the S&P 500 over to MSTY because its underlying asset is strategy. Like strategy is going to perform so well that it kind of masks or hides the NAV erosion to the point where most people just don't care. But it is not to our benefit to ignore the NAV erosion because there are investments that are better. I mean, literally just hodling strategy shares is better. Is MSTY better than holding, I don't know, My buddy's favorite dividend stock was like Enbridge. Is that right? Yeah. This one was paying it's like a gas company, natural gas or some shit. But this thing was paying a bunch of dividends. And we even tried that bullshit where you try to buy the stock before dividends, get the dividend, and then sell it. And it doesn't work because it just, the stock dumps every time they pay dividends. So it's basically a waste of time. But, will MSTY outperform this thing? Probably. But it doesn't mean that MSTY's going to outperform strategy. It's almost, unless MSTY has supernatural ability to trade and a bunch of luck, it's going to be very difficult to outtrade strategy. Straight up. Now I think they did adjust their prospectus to allow them to buy some uncovered long positions. So maybe that's how they'll do it. Maybe they kind of figured it out with the low implied vol right now. It's better to be a call buyer than a call seller for strategy. So maybe they'll get it figured out. But as far as I can tell, their NAV goes to zero eventually. Let's see. For sure they buy ASAP with STRC money, but will they announce during earnings or wait until Monday? Oh, yeah, because they do usually just announce at the end of the week, right? Do you think once strategy has IPO'd all of the instruments they are planning for, they will start to really lay on the ATM for the non-dilutive prefs? I hope so. I can't imagine that that's not the plan. And they've probably got it all figured out. Like, okay, we can sell this much Strife, and we can sell this much Strike, and we can sell this much STRC. And they'll probably put a couple of more at least in, other ones in there. And they can just crank them up at varying torques, I guess. Let's see, I know a lot of working class people are trying to tell them to buy strategy versus MSTY. You can see how that would be difficult when you're speaking to the choir. That's another thing. I get it. We get it. Yeah, and that's why I actually mentioned MSTY to my friend, because he loves dividends. So I'm like, okay, well, this is a dividend stock, and it'll probably outperform every other dividend that he's ever had and ever will have. So in that sense, if you're talking to someone and they're saying, okay, well, I'm either going to buy MSTY or I'm going to buy, I don't know, Tesla might be a bad example, because Tesla should be fine too, because Tesla's probably going to go up forever as well. But IBIT, let's do that one. This one's probably a bad example too, because they're just going to print money for the next 20 years as well. But yeah, like even NVIDIA, as well as NVIDIA's done, is NVIDIA going to appreciate enough to compensate for NAV erosion? If the decision is between NVIDIA and MSTY, like clearly I'm going to pick MSTY. But that's not a binary decision that I have. I can invest in any stock on the market. So yeah, so I will say this, MSTY is probably a nice gateway drug into convincing people to buy strategy and Bitcoin in general. So in that sense, I can see maybe not quibbling so much about it. But in my position, and like we named the frickin' group True North, for God's sake, like I kind of have to advocate for the tiny little details. So I can't pump MSTY if I think it has a lower CAGR than MSTR, right? when we're talking to normies and TradFi peeps that we're trying to orange pill into the space, yeah, you do what you can to get them into something that's not losing them money. So yeah, that's a good point. I have shorted prior to dividend date on occasion and collected good profit. Let's see, minus div plus downward movement. Okay. Increase in derivatives is what it's all about. I wonder if the preferreds can ever get big enough to have options. Yield max preferred ETF. A yield max ETF on like a covered call preferred. The implied vol on the preferreds is going to be so low. Maybe not strike. Strike with the call option might have a little bit of vol to it if they ever get options. But Strife and STRC, I mean, STRC clearly is going to have shit. Like, this should have no absolutely zero vol whatsoever. But maybe Strike might be interesting. Buying calls on Strike, which has an embedded perpetual call. That's a weird one to think about. All right, where the hell was I? Yeah, same deal. I've got 2 covered calls. I got the 425s. I'll pull them off on Thursday. This account, this is the IRA. And I kind of just feel like by the time I'm able to get a hold of this money, I really just won't give a shit anymore. So I'm like, all right, cool. Let me just dump some into Tesla as well. But Tesla also has they just had earnings. My bad. They just had earnings. So my, oh wow. My covered calls in Tesla getting wrecked as well. That's cool. So depending on what happens this week, I may have to roll. I'm gonna have to roll to pay for those or pull off a position or two. The only long call that I have in profit is this June 800, which I don't want to close since it's so far out. So maybe I'll just hedge it. Maybe I'll sell like the 790 strike or something and hedge this position out, take the profits to pay to roll this. Something along those lines. We'll see. My spending account, same deal. I got the 440s. These actually worked out better than the 425s did. Close these out on Thursday. Yeah, a whole lot of nothing really. Just a bunch of talking today, I guess. This was the challenge account. I really didn't even change any of these positions, but now I can pretty much just trade it as I prefer. I'm using like $100 in margin. I should probably just sell a share to get rid of that, but same deal. I'll be closing these covered calls down on the 31st. So I probably will have to take a few positions off or just go in using a little bit of margin. We'll see. All right, the 5K account. Why do I have buying power? I don't. Options collateral 4,000. Okay, so this is fake news. I don't have buying power. Why do I have notifications? I bought 100 shares of CLSK. Okay. So I sold I sold the cash secured put in CLSK last week. What did I sell? Like the 1250 strike? Yeah. So I sold the 1250, got paid like $37. So now my cost basis, for some reason, Robinhood actually factors in your cost basis, including the premium that you sold the cash secured put for. So if I sell the 12 and get paid at least 13 bucks, I'll at least, do no worse than a break even on CLSK. So I could be extremely aggressive about it and just, this would be the most aggressive way to run the wheel as possible is, I usually try to bake like at least 10% call away value in here, right? I'll pick like the $13 strike. And I would say this isn't a rule for like every stock, but in general, it seems like with these mining stocks, if I put in 10% call away value, I can usually capture about 1% of the stock's price in premium for the week. So that's kind of usually where I go with it. But as long as I'm selling the 12 strike or higher, I can't lose money on this trade, even if, if CLSK goes back up to like $15 a share or something, I'd get called away at the 12. My cost basis is 12.13, but if I get paid 39, then that means I would profit, 26 bucks. If I sell the 13, my cost basis drops to 12 and I would profit 100 bucks on this. So it's just all a matter of how much guaranteed profit you want to collect with the premium that you collect versus do I want to sacrifice call away value to collect more premium? So what to do? I actually wouldn't mind if my shares get called away. So I'm just going to sell a very aggressive $12 call. This is going to knock my cost basis down another 38 bucks. So under $12 a share. Which will be fine. Why do I still have a notification here? Figma. It reminds me of Smegma. I don't know why Robinhood is telling me about Figma. I've never invested that, whatever the hell it is. Okay, so that doesn't give me, I've still got like $100 worth of buying power. So I wanted to put together that IBIT poor man's covered call, but the only way that I could do that would be as if I freed up some cash. I could dump my GME at a loss. My cost basis on GME is 28. And I've collected $50, $30. Yeah, the only way that I can afford to do the IBIT poor man's covered call is if I dump something. Yeah, GME seems to be the way to go. It's kind of a loser. And so the goal in trading obviously is never to lose money. But if you're invested in something and then you lose your if you lose your confidence or your thesis changes, right? I thought this would be kind of fun. Like, oh, okay, they finally bought some Bitcoin. Let's throw GameStop a bone. But they've been kind of disappointing. So that's going to give me 2,300 to play with. So if I try to put this IBIT poor man's covered call together, I'm going to go out here And this is not something that I would probably hold through. Okay, so I'll probably close this. I would probably want to dump this in January, but that would set me up to have to pay short-term capital gains taxes. So I would have to go all the way to January 2027, which I don't like, because that might be smack in the middle of the bear market. But let's just see how much that would cost me. $60 a $60 strike gets me about the 0.7 delta, and that's pretty close to my buying power. So that would work. And then if I did want to sell this position without selling it, I could just hedge it out by selling the 61 strike. And then I could just hold both of those positions until this long IBIT position was a year old, and then I could take I could take the long-term capital gains taxes on it. Yeah, maybe I'll do that. This is kind of aggressive, though. This is only a 70 delta. 76. If I go to 50, it's a nice round number. Decent open interest. There's only 23 volume here, though. This is not the best as far as liquidity here. I'm trying to figure out if I want to talk myself out of this. ETFs are usually fairly easy to trade, but this low volume is annoying. The tiebreaker is the bid-ask spread, which is pretty tight. It's only 20 cents wide, and plenty of bids and asks. So there's at least a market here. So let's just go with it. And I'll go out to, should I do September 5th or go all the way out to 53? Yeah, let's just do September 5th. And ballparking this, I would need to go approximately to the $75 strike, adding 50 to the cost. And so if I roll this every 2 weeks and keep half, that's $60 for 2 weeks. That's $30 for 1 week. And that's a little over 1% returns a week plus 50% call away value. If the price runs up from, not 50% call away value. It's only, actually, I don't know if I like this. So that's only $8 from 67 to, it's a little bit over 10% call away value. Interesting. So 10% call away value. The problem is, when I looked at it the first time, I was purchasing a much cheaper option here. I think I was only going out to like next June or something. Or was it January? Oops. Let's look at June. See, unfortunately, June just doesn't get me to 52 weeks. I think I was looking at January, and that's why it was so cheap. I could keep January until October and then just deal with the taxes. Otherwise, this doesn't look nearly as attractive as I thought it did. Yeah. I don't hate it, but I also don't love it. Anyway, it'll be fun to compare this to the strategy covered, poor man's covered calls that I have on now as well. All right, I'm gonna have to put this back in for a little bit more. Let's pay 18. What? 1881. There we go. All right, that leaves me with $1,000 of buying power. No, only $400 worth of buying power. So let's see if I can make a let's see if I can make a call debit spread work. Same deal. I'm going to go out to January. Slightly out of the money. Let's do, well, for January, I think I can go to the 500 strike. That should be fine. See if I can afford this. Yeah, that's only going to cost me 200 bucks. So spend 200, max profit would be 800. So that would potentially be a 4x if we go above 510 by January. I think that's reasonable. The only thing that I don't like about strategy spreads is the bid-ask spreads are not great. So I don't want to pay too much. Well, let's just see what this is going to cost me. This is probably not going to fill. And I'm just going to up this by like, oh, 225 they want? 230? 245. Medium. Yeah, I don't know. So you can already see that I'm losing 10, 20% trying to get a fill. Okay. 800 bucks worth of buying power. Let me just get one more 1080. Yeah. Average cost is 546. So I'll just dollar cost average into this. There we go. That's most of my cash. I think that's enough for the day. Howard says, consider a retirement portfolio for income. I can imagine a tiny MSTY or IMST in among the strife, STRU, STRC, STRK, STRE, and STRD. Yeah, that might make sense just for the lulls. Could check other markets for liquidity. Robinhood doesn't like to actually use exchange data and prefers to feed you to the market makers. Yeah, that's a good point. Wait, why do I have a warning here? Oh, I'm using margin. That's annoying. I thought I had enough money to buy that last 1080, so I'm just going to dump it. I'll get a day trade strike for this, but it's fine. Okay, For some reason, I thought I had enough buying power to buy that last 1080, but I did not. Yeah, there we go. My margin risk is gone again. All right, cool. Dana's already out there buying more STRC at 88 this morning. Yeah, that makes sense. That seems like an easy 10%. Like if they're going to try to peg this thing at 100, I mean, they're telling you it's going to 100. Seems like a no-brainer. Yeah, Justin Smith. Yeah, we can buy STRC at 89, and that's a no-brainer, right? Yeah, it does seem like it. So if the price is down, the only thing that they can do to pump the price up would be to either increase the dividend or buy STR themselves. I'm wondering if that's another role for STRD, because we've already kind of assumed that we can sell STRD ATM to buy strategy shares back to pump the price during a bear market. And I think they could do the same thing for STRC. Like if STRC, if they're having trouble pumping it up to $100, they could probably sell STRD ATM and buy STRC shares with it. That would be annoying if they had to do it already. Like if they were having trouble keeping this pegged at 100. But I mean, the damn thing just IPO'd, so we'll see. It's on Fidelity as MCSTP? Really? Yeah, it's not on Tasty Trade at all. Oh, sorry. STRC. No. MCSTP. No, it's not on Tasty. I think I got $50 on the Fidelity account. I should probably... That's already a pain in the ass, trading on Robinhood and Tasty. Adding a third, that's too much. Tried to buy on Schwab, unable to trade. Yeah, I mean, all of the other ones are available on Tasty. So STRF, STRD, STRK, STRC will probably be available at some point. We'll see. All right, just a couple of trades today, and we're all caught up on the chats. Appreciate everybody tuning in from wherever you are in the world, including Iraq, which is pretty cool.